Hi everyone, I'm Donna the Accounting Lady, and today I'm going to talk to you a little bit about how to read your profit and loss. Um, Before I get started, of course, if you enjoy these videos, if you get anything out of them, if you find them useful or entertaining in any way, please like, share, subscribe. If you have questions, comments, concerns, please comment below, and I will probably just make another video answering your questions. So there are 3 reports that I want my clients to be very familiar with right out of the gate, and that is the profit and loss, the statement of cash flows, and the balance sheet. Now, a lot of accounting companies especially are going towards a dashboard where you can kind of see at a glance how your company is doing, and that's fantastic. That's a really exciting thing that people are doing today, but I also think that as a business owner, it's important to know where this dashboard numbers are coming
bringing
from,
up
and
a sample company.
what you're
This is
looking
not my
at when
company.
you look at
It's
your
not any of my clients'
reports.
company.
You can't print the dashboard off and take that to your
Pro
2016 edition
loan
that is
officer
a
for an
sample
SBA loan, for
company.
example.
You do have to
So
have
here it is.
financial
This is our
statements,
sample company.
and
It's always
you
a good
can
idea
see
to
when you look
understand
at
what
your
it
profit
is
and loss,
that's
the
representing
first
your
thing you want to
business.
look
So
at
that was why I wanted to do this
is
video.
the name of the business. Is the first thing you want to know is it's yours, and the dates covered in this report. Now, that's usually almost certainly a question that I get all the time. Why isn't this stuff from October showing up on this report? Well, that's because this one only covers the first 2 weeks of December. As you move down the report, the first section is going to be all about income. And in this case, since they are a landscape design company, there's multiple different kinds of things that they're billing for. So we're going to kind of trim this up a little bit. There we go. Job materials. I don't usually go as granular as they were going on the job materials. The same thing about labor. We can go very granular. This is all done, by the way, on the invoices. And so as you set up your invoices and you work with your accountant, you need to make sure that you are explaining just what level of detail that you're looking for in your reports, and even why that's important to you. I just kind of find that when I understand the why, this is something I even do with my kids. When I know why, then things just make more sense. It just makes me a lot less inclined to be a little bit contrary. And when I know why, then, I don't know, there's just something about understanding the underlying reasons that makes it easier to actually do the work. So these first several items here, all the way down to where it says total income, are all of the income sources that they have chosen to break out for this company. The number that you really want to look for, that most clients are looking for, is the total income. And in this example, that's $18,700.77. And yes, I realize this is not the most interesting thing to cover. The next section from, let's see, this section here is called cost of goods sold. Now, a lot of people want to know what exactly cost of goods sold means. And what that means is these are the things that you have to purchase to provide your widgets, basically. If you're building widgets, it's the raw materials that you're making your widgets out of. If you're providing a service, cost of goods sold is going to include things every time, like merchant account fees are always under cost of goods, and you will hear a lot of accountants refer to it as COGS. If you are in a service-based business and you take out the cost of labor prior to figuring out what your profit is, that may or may not go under cost of goods sold. But cost of goods is the cost that it takes to produce the widget or service that you're selling. The next section, and you'll notice that it is taken out, income minus the cost of goods, is this $16,923. The next section is going to be expenses. Something interesting that's come up for me not too long ago is the idea that not all money going out goes to expenses. Expenses are generally the things that you have used up in the last 30 days, certainly within the last year. So an expense is something that is consumable. It is not something that is going to be carried forward. It's something that you've used up. So we're going to look here at first expense is usually that they have listed is the biggest one for most small businesses, and I actually do like to get more granular on this one whenever possible, and that is payroll. Payroll is by far a small, I mean, you can even tell by looking at this one. This is the small business's biggest expense. You've got to know what your payroll numbers are, especially compared to your income numbers. The next section is going to be automobile expenses. There are a lot of things that I prefer to break out for automobile. Fuel is one of them. Maintenance and repairs is another one. I will only break out insurance. You'll notice below that they have insurance broken out. I will only break out insurance like that if I actually have copies of the policy and I know how much is going to which policy. So we do want fuel broken out. And when you do that, one of the things you want to do is to make sure that, let me kind of backtrack. As you break out your fuel cost, keep in mind that you do want to keep track of your automobile expenses. However, it may be more advantageous for you on a tax return to claim miles instead of actual expenses. Either way, you need to know what those expenses are, whether it's for tax purposes or not. The next section is insurance. And again, I don't break out insurance expenses unless I know exactly what those expenses are. Often I don't have the policies. And if that's the case, then I just plain won't break them out. Otherwise, if I do have the policies and I do know that how much goes to what, then I will go ahead and break them out. Just kind of the model of my particular business does not, I have a lot of clients that don't always give me all the information I need, so that's why I'm explaining why I don't break things out a lot of times. Kind of interesting, they have job materials down here. Job materials actually should go under cost of goods. And this is actually job materials are the things that this particular company is using to complete their jobs. So lumber for decks and patio or plants and sod, they have to go out and buy that, so that's something that is an expense to them. Rent, of course, is an expense, and then all of your utilities. Something interesting about telephone, and again, I may or may not break out utilities depending on what the client wants from me. Interesting thing on telephone, if you are like most of us today where you're self-employed and you use your cell phone for everything, the IRS will allow you to deduct, unless they've changed it again, not the first line, but any line that comes into your home. So I actually pay the phone for all of my kids, well, 2 of my kids, and claim those as, quote, the house phone. But I personally choose to use my cell phone as the line that's used for business, because that's exactly what it is. One that's missing here that most businesses do have would be computer and internet expenses. So we're going to go through, here's your total expenses for the year, and you notice their net ordinary income is very low, and that's very common for these kind of contractors. And then I know you're asking, why is that called ordinary income? I'm going to answer that in just a second. Under other income, we have interest income, and that generally is because they have sent out an invoice, someone has not paid it, and so they're charging interest because the bill is overpaid, or excuse me, overdue. And then we have your net income, which out of the $18,000 that they brought in, they actually only have an income of $340. That's actually very common. We see a lot of people that don't have a good handle on their expenses. Here's the categories that I see that are really problematic for small businesses, especially if they're solopreneurs. One is meals and entertainment. Now the catch with meals and entertainment is that people think that, oh, I'm going out to eat with my friends and we're going to mention the business in passing and that makes it okay. Make sure that when you're putting, and this is not from a tax perspective, okay? That's between you and your tax preparer. But this is for you to make sure that you know what your business is doing. That's my concern. I am planning to do taxes hopefully this coming year, but my concern is that when my clients look at their profit and loss, I want these numbers to be meaningful to them. So if they're writing off taking their kids to McDonald's to get a Happy Meal, then that's not meaningful. That has nothing to do with their business. If they are a couple who go and have a nice dinner and sit down and they really do talk about business, then it is meaningful. That's something that they really need to budget for. I really have got to stop saying, I went to Toastmasters, I know better. So the next thing that we need to worry about or we need to think about is, like I said, make sure that the numbers that you're turning into your bookkeeper are relevant to your business. Again, with the meals and entertainment, I have had clients that have looked at their profit and loss, decided that they were in profit. They didn't look at their balance sheet to see what liabilities are coming up, and that is coming up in a later video. They assumed then that they had a lot of money to spend because there was money in the bank, and they ended up not listening to me and actually having to go out of business because they owed the state so much money in sales tax. And I'm going to cover sales tax in the balance sheet video because that's a liability. That is not your money and you can't spend it, basically. So as you're looking at your profit and loss, again, where a lot of my clients will get confused is they'll say, well, I have more than $300 in the bank. Sure, that's a cash flow thing. We're going to talk about that on the statement of cash flows. Cash flow, which I will define again, is the money that flows through your business like a river. And you want that to be positive. You want your cash flow to be greater than your expenses. But you also need to make sure that you're paying yourself. This client is one I would probably sit down and have a hard talk with because I'm looking at, they have plenty of money coming in, but they have so much money going out that they have a problem. The problem is either they need to charge more or they need to cut their expenses. And I would want to sit down with this client and say, you are this close to the edge with your cash flow. You are not making money. And let's figure out if the problem is that you need to charge more. Do you need higher end clients? Do you need people that are going to pay timely? What's the problem here? Or do you need to cut expenses? Often it's both. This client, because I don't see a lot of meals and entertainment, I don't see a lot of advertising, I don't see a lot of marketing, I'm probably going to say they probably need to charge more. Some of the hiccups that my clients have had over the years has been that they assume that just because they are going to get dinner or they buy a lot of sodas at the convenience store, where the fountain drinks are, that's probably the most expensive soda you will ever buy, by the way, or they are just not paying attention to their money. And that's how you go out of business. That's how you lose your business. That's how you lose everything. You've got to know where your money is. You've got to know where your cash flow is, and you've got to know whether you need more clients, whether you need to trim your expenses, whether you need to you know, where exactly the problem is. And without looking at your profit and loss, this is the first step to knowing if your business is in really good shape. So with that, I'm going to kind of end the video, and I am really looking forward to hearing from you. Again, that's it for today, and I'm looking forward to seeing you.